A company can get so big that it runs out of room in its home country. It can then join the stock exchanges of other countries to gain exposure to more investors and raise even more money. Number go up, companies continue to do what they can to grow. If you're an American and not a professional investor, you probably just think about American companies generally. But there's good evidence now that this is not the best way to invest. And let me be clear, I'm not giving you investment advice. I'm offering information to a general audience on the internet on how to have better risk control and potentially better returns. America is not guaranteed to grow the most each year. In fact, America was far from the top in 2025. And I want to explain why that's important for your portfolio. Toyota is a Japanese company, and it got on the American Stock Exchange through an ADR, or American Depositary Receipt. An ADR is basically when a US bank buys real Toyota shares over in Tokyo, locks them in a vault, and then issues certificates to investors here in American dollars backed by those Tokyo shares. It gives Americans access to a foreign company in our own currency and in our own time zones. In Tokyo, Toyota's ticker symbol, or the name used on a stock exchange when it's traded, is 4 numbers, 7203. In New York, its ticker is TM. In London, it's TYT, TMN in Mexico, TMC034 in Brazil. This is called cross-listing. And the point I want to get across here is that there are a lot of stock exchanges worldwide, but a single company will have a single home country. And if the US is your home country and you pay attention to the SP 500 or the SP Total Market Indexes, those don't allow cross-listing. There are no ADRs on there, and they don't include any foreign companies. Even a company you likely know well, like Toyota, cannot be found on there. So it matters what index you're looking at depending on what you're after. And the question I'd love to ask every American investor is, how much exposure do you really have to the diversification and growth of the global markets? America's got around 4,000 public companies, but worldwide there's around 58,000 companies across major exchanges. And that number's closer to 80,000 if you count smaller over-the-counter investing. This is a lot of companies with growth potential, while at the same time, the 4,000 American companies make up half of all the value of the global companies combined. Big claim here, and I'm going to try to back it up, but US diversification is not as powerful as global diversification. Robert Merton, a Nobel Prize-winning economic scientist, helped pioneer research known as the investor recognition hypothesis. And it might be the most useful thing he ever wrote for a regular investor. It's a simple idea. You cannot buy a stock you've never heard of. Merton pointed out back in the 80s that investors don't actually scan all public companies on Earth. They typically buy from the small handful that they know. But the few investors who do own uncommon companies expect a higher return to compensate for taking an unfamiliar bet. I'll say that differently. There are higher expected returns from lower priced stocks, and America is priced relatively high while the rest of the world is priced relatively low. And an obscure foreign company can be perfectly run, wildly profitable, and still trade at a discount for the crime of being invisible. This is a message about global diversification. And think about what Merton's theory says about your portfolio. If investors only buy what they can see, and all you can see is the SP 500, then there's an entire planet of companies you'll never own. Not because you rejected them, but because they never crossed your field of vision. More than 90% of the world's public companies might be sitting outside of your awareness. And this is something to ask your advisor about, and this is something to research how to get real diversification. To close out on this, I just wanted to raise awareness of the modern standard of diversification and ask if you're on the modern standard. A mentor of mine always says that the quality of the questions I ask determines the quality of my life and the quality of my investments. And when America holds the highest share of worldwide equity and the largest percentage of investment grade bonds worldwide, are you someone who wants to own a diversified slice of the world? And what is the cost of only investing in a place that has already grown to be the biggest? Subscribe for more perspectives that you might not get anywhere else. I am a financial advisor, but I am not your financial advisor, and I hope to see you next week for another video.